story, something like that, you can just drop it there. But I will drop that in there. I think we are live. All right, what's going on, everybody? Welcome to Wolf. Happy Monday. My Bitcoin conference just wrapped up a few days ago. I figured we'd kick off the week with a stream with Mr. Robert Infra, who is a regular in a lot of our Bitcoin spaces and someone I've learned a ton from in the world of macroeconomics as well as Bitcoin, all the things. And he just started a YouTube channel, and I was like, dude, there's no better time to get him on the stream. So, Robert, thanks for coming on.
Yeah, good to be here. Good to see face to face.
Absolutely. Yeah, and the conference is a lot of fun. I definitely, even if you're not going to meet people in person, doing the one-on-ones, whether it's on a call or a stream, I think that definitely is great, especially if you're commenting on a lot of the things that are going on in the Bitcoin world. I mean, it's just news story after news story, and then there's all these Bitcoin, like bull posting accounts, I guess you could say. Yeah. And so sometimes it's hard to find like steady footing. And so it's been great. Like, I mean, I can't remember even exactly where I found you on X, but you started coming to our Bitcoin spaces back when there was like 30, 40 people.
Yeah.
And you
20,
just
30, 40.
Yeah, it was a small space, but you were always so passionate about coming. You always showed up, and I was like, man, this guy's awesome. And you know so much. So we'd love if you could give like a little bit of background on why it is you're in the Bitcoin world, why you spend so much time yapping with us on spaces, and then we'll kind of dive into the rest of the conversation.
Yeah. So, well, I came across Bitcoin. I can't remember the exact year. It was like very early days. It was back when there was that message board. I think it was called Bitcoin Talk. And the Bitcoin faucet, you could go to this website, click a button, and get like 5 Bitcoin or something. Oh. It was very, very early days. I came across it on like some obscure anarchist blog spot. And like the cypherpunk component of it. Like, I don't understand technology, but it interests me, or it's cool to me. And so I was like, intrigued by that component of it. And yeah, just kind of the like, libertarian anarchist sort of component to it of, censorshipless money, that the government can't control. That was all really appealing to me. I had no idea anything economics, nothing. I think maybe taken like a very brief high school course in like Keynesian economics, and so, yeah, I didn't really understand what I had. And unfortunately, through the various cycles, I think at the peak, I had like 300 something Bitcoin.
Oh,
and yeah, and so I didn't know what I had, and it's gone. So,
oh man.
Yeah, but then, COVID comes around, and money printing, markets are going crazy, meme stocks, AMC, GME.
Oh yeah.
That was kind of like, I would say, the biggest like intro kind of that I had to markets. I was already like messing around with stocks and obviously Bitcoin kind of on and off. So I already had some kind of, introduction to markets, but I would say like AMC, GME was really kind of what like got me really interested. Yeah, I also wanted to know why everything felt so like expensive. I wanted to know why I was, at my day job getting raises, and like pretty decent raises, like, but yet it was still just, I just felt like I was falling further and further behind, and that the economy there's something going on that I couldn't describe. And so that's what really got me interested in like macro, I was like, okay, I'm pretty nerdy and I'm pretty obsessive when I can want to be. And so, like the way my brain works, I've always loved puzzles. Like, I was that weird 4-year-old kid in the corner, like at daycare, that was like, all the other kids were like playing with toys, and I was like doing crossword puzzles and stuff. So I kind of knew it was kind of up my alley, because it's all numbers, it's data and numbers and very black and white kind of stuff. But yet there's another side of it too, which was, I also have a bit of an artistic side. And so I kind of saw that it was like this cool meld of like, on the one hand, there's black and white data. But then on the other hand, it's like, well, how do you interpret thousands of data points, and different people can look at the same data and come to totally different conclusions, which at the time was happening a lot. I would sleep with Bloomberg TV on overnight. Like that's how committed I was
Wow.
to figuring this out. And so
That's
hopefully
hilarious.
like absorb, overnight. And yeah, like at the time, they'd have a guest on, a very, intelligent, successful, hedge fund manager that would say, oh, the economy is going into imminent recession. And then the next guy would, looking at the same data,
Yeah,
say the exact
full
opposite. So
opposite.
yeah, so I thought that like that element of it, there is kind of like a weird creative sort of thing to it. And so the two of them just kind of like meshed perfectly for my brain. And I found it super interesting. And yeah, by the time that I started to like get into macro, looking at like the debt and the fiscal picture, and kind of really going down some of those rabbit holes, that's really when I realized what Bitcoin represented. And so unfortunately, I didn't really grasp Bitcoin's true properties, I guess you could say, until like 2022 probably.
Gotcha.
And that's when I became like, yeah, just this. The more digging I did, and I would spend 8, 9, 10, 11 hours a day on TradingView, reading Investopedia, Wikipedia, reading Bureau of Economic Analysis papers, and Federal Reserve, academic papers. And I really took it seriously. And like the more that I kind of dug, the more certain I became about kind of Bitcoin and what it represented. Yeah.
Damn, dude, 300-400 Bitcoin. Wow.
Yeah, I know. It's
That is
something I think about
wild.
every day, multiple times a day. Yeah.
You serious?
Yeah.
Oh man, that is tough. That is
Yeah.
tough. Yeah, my first introduction to Bitcoin was just in a public speaking class, and one of the guys who was doing a speech, super sketchy looking dude. He's like, "Yeah, man, you can use this Bitcoin stuff. It's pretty cool. Like, the government can't take it." And he was just super conspiracy-esque, and I was just like, "What?"
Yeah.
I was like, "What? No, I'm good." And shout out to Bitcoin News and
Oh, hey, what's up?
like BCK. By the way, I shared that link with you in the private chat if you wanted to reshare it. Anyone
Oh,
who's
perfect.
watching, if you guys are enjoying this conversation, got Mr. Robert on the show. Please retweet it, tag a friend, let people know. If you have any questions or thoughts, you can definitely drop them down below as well. Okay, cool. Yeah, so like my first experience was like it must have been 2017, and just did not grasp it. Was not really looking. Money was like not that much of an interest. I was just in college. I was trying to survive, and so just skipped over it. I remember my dad told me a story when he was like, it must have been probably a decade ago, and one of the kids, he was teaching computer science, and one of the kids walked up and was like, "Yo, you should just like, you've got rows of computers. You should just like mine Bitcoin at night." He was like, it was a private school. He was like, "You could totally get this approved. Like, it would be awesome." And I was just like, I don't know that why would we even bother getting those coins? And he was just like, yeah, that probably would have been like hundreds of millions of dollars.
Yeah.
So I think a lot of people slept on it.
I did that too. I had a mining phase where I went a little crazy with it. I think at the top I had like I think they were called jalapenos, and I had like 3 or 4 of those. A6, like A6 were just, if my memory serves, they were just kind of starting, and I think they were like 2 gigahash per unit. And then I had, I think, 8 GPUs.
Wow.
And so they were just over there in my living room, like, the sound like a jet airplane taking off. But
That's
yeah,
hilarious.
like it's frustrating because like I really had no clue what I had back then. Even that kind of 2014, 2015, because I had sold some in that first pump. Even that 2014, 2015 era, like if I had even just gotten it back then, it's yeah. So I'm just trying to get back to like a fraction of what I had back then, slowly but surely, but probably never will.
Man.
Yeah,
that's brutal. That is brutal. What are some of the things that you've I guess learned about, when you're tracking money and you're in these spaces constantly talking about, where's the money moving? Why is the money moving over here? Are there strategic political things that are going on? What are some interesting like conclusions or things you've pulled from doing all this research that has helped you kind of shape where you're at
I
and where
would
you're looking at
say,
the world?
yeah, I would say recently it's been currencies. So, I kind of, and I also want to give credit to David Nikowski. He's in a morning space I do every morning, and he also picked up on this. But around like December, January, I started to get this kind of impression. A lot of, like I was mentioning earlier, my experience in trading, but also kind of in macro, is like intuition plays a pretty strong role sometimes. Um, and I can't remember if there was any like particular reason that uh, I started kind of going down this direction, but uh, there must have been a trigger, but I can't remember. But the capital repatriation. I was kind of looking at like S&P relative to other, like the DAX, the CAC, the Kospi, all these kind of foreign indexes. I was looking at the dollar, and I was looking at all this and kind of started to formulate this like capital repatriation concept. And this was like very early days, and I want to say it was like December, January.
Mm.
And then I started to see actual evidence of it. There would be brief moments. I wake up very early. I'm on the West Coast, and about 3:30 West
Oh.
Coast time. And so when I wake up, what I'm seeing is, Europe session. And I was starting to see like dollar down, bonds down, and equities down, futures down. And so, yeah, I kind of really took hold of this and really started to kind of develop it. And the more that I kind of actively paid attention to it, the more that I started to see that this was actually, in fact, happening. And like, I think what had started it was the tariff discussion mainly, and the kind of hostility you could call it with the rest of the world. And also just what the kind of relative valuations of US versus, I mean, we had gotten to some pretty insane levels where like 70% of global equity market cap was US. So yeah, it was a number of things that started it, but then the more time that went on, I started to notice this kind of pattern in like before the New York session, which starts 6:30 my time. Like those 3 hours before New York, dollar down, bonds down, equities down, and gold up a lot
Mm.
of days. And Bitcoin didn't have as strong of a correlation, but usually it would be like dollar down, bonds down, equities down, and usually gold would be up. And yeah, and I kind of really started to pay attention to it, and I would look at interest rate differentials. So you take the interest rate of, say, the US 10-year. If you're trying to evaluate, say, the dollar euro cross, I created an average of, I think, 9 or 10 European bonds,
Mhm.
bond yields. Basically, did a formula where I could take the average of that, and then you just compare it to the U.S. 10-year, the interest rate. And so, yeah, that interest rate differential is like kind of one of the main drivers of a currency. And what I started to really notice in like March was it kind of really took off. Like the dollar, I remember there were 3 days in either late February or early March where the DXY was down over 1%, which for a move in a currency, let alone the reserve currency, was kind of major.
Mm.
And 3 days in a row of that. And so, yeah, the more time went on, the kind of heavier this trade got, and the more evidence, I guess you could say, where currencies were diverging from their interest rate differentials, and that trend really kind of, though, I kind of mark Liberation Day as like a big turning point. That was really when things really kind of took off and diverged. And even Bitcoin too. If you look at Bitcoin versus DXY, that was when that happened, right? It was Liberation Day. Before that, I think Bitcoin was actually kind of due to its financialized, IBIT, all the options, kind of all the financialized aspects of Bitcoin recently. Bitcoin had actually kind of been trading as like a high beta NASDAQ, right? So it's like part of the kind of American risk complex. But then, yeah, Liberation Day happens and Bitcoin like very sharply diverged from the DXY. So I look for like correlations, and then when those correlations change or break, I do a lot of like relative charting, where you take one metric and you divide it by another. So like average hourly wage divided by
Mm-hmm.
gold. If you look at average
Well, that's
hourly
interesting.
wage, it's it looks great. It looks like it's headed up and been headed up for a long time now. But once you adjust for currency debasement, it's pretty ugly picture actually. So yeah, I do a lot of those kind of charts. And yeah, just like patterns, and more I kind of look at it like a big puzzle, like the world's biggest, most high stakes kind of puzzle. And so yeah, I sometimes you just kind of see it. Sometimes you
Yeah.
just kind of people have asked me before, and with trading too, and like a lot of times it's just intuition. I've stared at so many charts. I mean, I've probably spent in the past like 5 or 5.5 years, I probably spent like 35,000 hours between
Wow.
macro podcasts, reading papers, just messing around with trading view. After a certain point, it kind of just, you start to be able to make sense of it. And it just kind of clicks. And that happened maybe like a year or two ago with trading and with macro, where it just kind of, things started to kind of fall into place and actually kind of make sense, right? Because I would hear all these macro people that I was trying to learn from, and I would, or traders, and there'd be a chart, right? They're doing a video or a stream, and they just start like, it's like it immediately speaks to them, and they're like, oh yeah, this, it's definitely going to reverse here, and then this, and it was frustrating to me that these people, like, I was trying so hard to like learn, and like understand it. And these people, it like just kind of came naturally. They would look at, they had a macro framework, right? That they could explain very eloquently, very easily, or trading, and yeah, I was just trying to get there. And I would say it took until about a year or two before everything just kind of started to click. And yeah, it's been pretty cool. I mean, over the past, I kind of kept like a little scorecard of like things I had been saying for my own accountability, right? Like for
Yeah.
my own learning. And I was looking at it the other day and like adding to it. And I mean, the past year and a half has been pretty like 90% sort of win rate on these kind of thematic things. So yeah, it's not to say it can continue forever, but at least, kind of the modern with Trump, and, it, I, I think a lot of in the macro world, I think a lot of people struggle with analyzing current situation because it's so different from the past 20 years. And again, that's kind of where that like creativity element comes, I think, where, I've been doing a lot of work on like Triffin's dilemma and Dutch disease and resource curse and the dollar and some of these kind of deeper, more complicated issues. I've been doing that for a while. So like, a lot of traditional finance people trying to do macro, like they don't know what Triffin's dilemma is. So I think the Bitcoiner kind of like curiosity side has helped, because yeah, like if you understand Triffin's dilemma and this and that, and like you look at what is going on today, the kind of bigger picture, and it's like, oh yeah, this makes sense. Like this is like one of those kind of once in a generation sort of pivots, in my opinion. So
Yeah. Anyway, I was listening. I was at the conference this past week, and Sailor was talking about in one of it was a video. It was either a video I saw or it was like a side speech thing he was doing, and he was talking about how the next 10 years, 2025 to 2035, will be like the Bitcoin gold rush in terms of just mass adoption for Bitcoin. Do you share those thoughts? Do you think it'll be this next 10 years, or What are your kind of general thoughts on Bitcoin?
Yeah. So I was actually just kind of preparing a video, kind of looking at commodities,
Mm,
and interestingly, it just kind of confirmed my broader thesis of where things are headed, which is, due to the fiscal situation, not just here in the U.S., but basically every developed economy, including China, is over levered, is an understatement. And they have too much debt, and these
mm,
long-term debt cycles happen in the kind of 60, 70, 80 year sort of big debt cycle. And then within that, you have the kind of shorter 4-year-ish, 2-year-ish refi cycle that Michael Howe talks about. And yeah, I think that you look at debt to GDP, 125%. You look at interest, which is the fastest growing budget item. It's now more than defense spending. It's now more than $1 trillion a year, and more than 20% of government revenue. You start looking mandatory spending so Social Security, Medicare, Medicaid, defense, and interest. Just those four kind of mandatory budget items are more than 100% of government revenue. And so, yeah, all this to say that basically, financial repression, the real value of U.S. Treasury bonds, the real value of the debt is too high, and needs to be devalued in real terms. So in real purchasing power terms, the U.S. will never default. We have the dollar printing press. Now, if you buy $1,000 10-year bond, you're getting 4.5 interest. You'll get your $1,000 back in 10 years, but what that $1,000 gets you
mm,
must be less than today. We must,
mine.
kind of run this negative real interest rate policy. You add the kind of fiscal issues of the U.S. and the West. You add that in with kind of the more geopolitical sort of trends of deglobalization and this kind of fourth turning esque kind of conflict and volatility. You add those two together, and something like Bitcoin emerges, and it's kind of a no-brainer. I mean, it might be heretical to say, but I also think gold is going to do very well. I mean, I started talking kind of bullishly about gold in 2022, and it's doubled.
Mm,
Like 100% return in a couple years is not Bitcoin, and like I don't put a ton of my money in gold, but like I like gold too. Like I think that the Bitcoin gold hate, like I think it's silly. I think it's kind of counterproductive. Like gold bugs, which is kind of how I got my intro into like some corners of the macro world, was actually
mm,
people like the kind of gold bug type people. Uh, that's the first intro I got, and like
mm.
they're like 99% overlap with Bitcoiners, and so it's like, yeah, I personally try to like, not go down that like toxic that route. But yeah, gold, Bitcoin, something like that, like both of those emerge as like a kind of no-brainer, in a world where there's capital controls most likely, and pretty significant financial repression. I mean, after World War II, I was looking at it for the video I'm doing. Inflation at its peak was 19%,
Mm,
and the treasury yields were capped at, I think, 2.3, 2.5. So that's a pretty negative real rate. For those bondholders, they got absolutely smoked.
mm,
And there is a huge value proposition for something like Bitcoin, and the decentralized nature. I mean, all the properties of Bitcoin, I don't like every single one of them is kind of what you would want in
mm.
this sort of kind of environment that I think we're all kind of headed into.
Yeah, that was beautiful. Yeah, it's interesting with Bitcoin because the more I dive into it, or someone will throw an interesting argument against Bitcoin, but every time I do research and try and nerd out over it, my conviction pretty much grows every single time. I mean, it is. I mean, I'm sitting here going, this guy thought of this 20 years ago and like found all these ways around stuff that hadn't even happened yet, and it seems to have been like so beautifully written. I'm like, who, dude? This guy must have been from the future. I had a few people at the conference speculating on who it might be. I got some people saying it might be Michael Saylor. Jack Dorsey came up a lot. There's a couple of like the guys who are super OG in
What
the
about
Bitcoin
NSA?
world.
What
Oh
about the
man, yeah,
government?
I was gonna say that was I've seen a few people with that argument
Yeah.
actually. Do you have any thoughts on who it might be? Do you think it's a silly line of questioning? Like, what are your thoughts on the whole conversation?
No, I mean, I think it's relevant, to some degree. Yeah, I don't know. I tend to kind of lean towards probably like the NSA.
Really?
Yeah. And it's not a view that I hold super strongly, but like just kind of that intuition I was talking about, just kind of what it feels like. It feels like it could have very well been created by the NSA. But I don't know. Yeah, like I watched that documentary that they did. It came out like a couple months ago. And yeah, like I've never seen like a super convincing argument. Anyway, but like, yeah, the degree to which Bitcoin kind of foresaw so many different, things that had not happened yet, really, it is pretty incredible. It's pretty kind of, the word masterpiece, or like divinity, right? Like these sorts of words do kind of come to mind. I mean, it was pretty incredible. I mean, I remember 2008. I was trying to get my first job. I was like, turning 18, trying to go out into the adult world. I think the first job interview I ever had was like 2 weeks after Lehman Brothers collapsed. So I remember, that, and I remember Occupy Wall Street.
Wow.
And like, I remember the whole thing. I was just coming into adulthood, and like the fact that like someone in that moment could have created what he did, or they, is pretty incredible in my opinion.
That's a good point. That is a good point. Does it matter if it comes out and it is in fact from some kind of government agency? I mean, I feel like that would kill a pretty big spark of the Bitcoin
I don't know.
energy, I bet. What do you think?
It's a protocol, at the end of the day, and our government created elements of the, I'm not a tech expert, but my understanding is, DARPA, I think it was, created out, what is basically the internet and kind of things we use every day as protocols. So yeah, I look at it like that, now the only thing like with who created Bitcoin, the only thing that I could see where it really kind of does matter is those Satoshi wallets.
True.
And like they created this, I mean, we kind of self-created a bit with the whole Michael Saylor sort of situation where that firm went digging to try to find his wallet address. You kind of create a situation where like, imagine what's going to happen to the Bitcoin price when if those coins ever move, so Satoshi or now Michael Saylor, it does matter if those, that kind of size moves, it could have a pretty dramatic impact on the Bitcoin price, but only short term. Like I look at Bitcoin as a multi-generational sort of thing. I've, over the past 3, 4, 5 years, I've tried to like reorient my my time frames, and be not so high time preference. So yeah, like the short term day to day stuff with Bitcoin doesn't really bother me, and I just kind of use it as opportunities to like power DCA. But it could have a pretty, I mean, if those Satoshi coins ever moved, or now
that would be insane.
Yeah, with Saylor, like it could probably take Bitcoin down pretty, probably like 10-15% in a day. It's probably my guess.
You think we're out of the woods for the 40 to 60K Bitcoin? You think we ever revisit those kind of prices?
I hope
and
so.
By the way, happy to if you want to share screen for anything, happy to. But yeah, you said you hope so.
I hope so. Just for my personal, like the
Yeah.
way I look at it, and I think I mentioned this in one of our spaces, was like when the Bitcoin price goes up, right? Like my my wage, my time and energy that I put into my day job is being devalued, right? Like, so, as Bitcoin gets more and more expensive, I'm still making the same fiat salary, right?
Yep.
Um, it's so I don't know. I might be like the most unhappy Bitcoin bull, because when it's just ripping higher, like legitimately, I'm kind of pissed off most of the time, because like that's how high my conviction is, right? Like
Mm,
I wish it would drop below my cost basis,
mm,
so that I could add and bring that cost basis down. That's how I look at it.
yeah.
And so yeah, like that one period of time, and was the last summer, when it was ripping pretty hard, I was
Hmm.
like very unhappy. To see it basically double. 40, 60, I don't I don't think so. I mean, maybe
Mm,
60, maybe. Um, we're in a pretty kind of uncertain sort of environment right now, and
yeah.
uh, there's all sorts of shocks that could, that could be pretty negative with, I mean, all the stuff that happened in Russia overnight. Then you have
Yeah.
India, Pakistan, you got Israel and Iran. There are all these geopolitical shocks that could be pretty major. Um, there. I think that there is going to be huge volatility, like
Mm,
in the next couple of years. Like I think we're moving into kind of just a structurally higher volatility kind of world. Um, that was my main prediction for 2025 when I
hmm.
did my kind of, what's going to happen in 20. Like the main thing I kept coming back to is like volatility.
Mm,
It's going to be volatile, and so just hang on, don't use leverage, like whatever you do, just kind of, ride the wave. So if there's some significant escalation geopolitically, I could see it probably retesting 60, but it would probably find pretty good support in
mm,
that area if I had to guess. And
yeah.
I would be, yeah, I would be doing everything I could to buy it 60K.
Same. Yeah. 100%. Yeah, that would be nuts. I would love for it to come back down. We kind of talk about that a lot in our spaces. We're like, I'm relatively happy if it goes up. But the more I learn, the more I'm like, I needed more time. Like, why did it take me all the way till now to start to understand what Bitcoin is?
Yeah,
But
that's how I feel too. I'm like, I kick myself every day because I have so much conviction right now.
mm,
And like I said, gold too. Like I have extremely high conviction that gold is going to continue to do
mm,
extremely well and outperform. Now Bitcoin will perform better than gold, but like, that kind of general short dollar sort
mm,
of thing, like, yeah, like every day that goes by, I just kind of builds more and more confidence. And like you have this pivot recently where this was the administration that was going to balance the budget and cut
mm,
all this spending. And at first it was $2 trillion, then it was 1 trillion, and then you
mm,
see they ended up only cutting up. And they've pivoted. David Sachs, Elon Musk, and Scott Bessent within the past couple weeks have all basically said, yeah, we're going to run it hot. We're going to kind of do what the prior administration did and just run massive
mm,
deficits, higher, just try to pump up nominal growth. And nominal growth includes inflation. So
yeah.
yeah, this pivot towards kind of run it hot, I think it'll be good for Bitcoin for sure.
Mm. What other investments make sense to you? Just Bitcoin and gold? Are there other ones where you're like, this is worth sinking your time, money, and efforts into?
Yeah, I mean, I not here probably, but I did. Um, when was it was at 150 yen, a dollar yen was at 155. So that would have been, yeah, like late last year, I think it was. Dollar yen was at 155. It was looking like it was gonna go retest 160 again. That's what everyone was saying. But I was seeing this kind of weak dollar trade and this repatriation trade and accelerating Japanese growth, wage growth, inflation was kind of reaccelerating, and developed world. So I said at 155 that the yen looked like a really good good short yen, long yen. And that I still have fairly high confidence that the yen will go to at least 130. But the risk reward here is a lot different than the way I saw the risk reward at 155. So I like, it's a different call from here. But if people listen to that call, I think there's still a lot of room for the yen to run. I think the euro, like, here's the thing. I hate these currencies. You look at Japan with like 250% debt to GDP, right? Like they are fiat Ponzi taken to the extreme, right? But like, just removing all my kind of, opinions out of it, just looking at it objectively, I would say foreign currencies, are undervalued compared to the dollar. And there's still, especially if we go down the road of like a Mar-a-Lago Accord, I like the Swiss franc. I mean, the Swiss franc is the only currency that I could find that's actually appreciated versus the dollar over the past, decade or so. So yeah, the, Swiss franc is, recommend to like someone like my parents, right, who are like getting older and stuff, and not about making money, just trying to preserve purchasing power. Gold, Bitcoin, and yeah, I think also emerging markets. I mean, not even necessarily emerging markets. Like I'd been talking about India and Brazil. I started kind of getting bullish on them maybe 2.5 years ago. And I think that like they will relatively outperform, but I would also put like the DAX, the CAC, some of these even more developed indexes will probably outperform SPY. I mean, that's basically what we've seen. We've seen kind of all the things that worked for the past few decades have been working much less well. And so I think, we're kind of in a higher inflationary environment. Personally, I don't really like equities, like personally. But as a trade, I would say that, kind of a reversion to the mean between the valuation of US indexes versus foreign indices, whether that's an emerging market or developed. I think both will outperform the S&P, the market, market cap weight. So yeah, I think those are the main ones. I would say a little diverse, if you need to kind of do this, a little diversification away from the dollar, right? Warren Buffett, the biggest bull on the US, in his, day-long conference that I watched, mentioned like basically get out of the dollar a couple times, like 2, 3, 4 times. And that guy is like the biggest bull on the US, on the dollar, right? So I think kind of reducing your exposure to the dollar, and one of the ways you do that is by going long on gold or Bitcoin. It's basically a short dollar, sort of trade. So that's the one I'm most confident in. But if I had to make like another call, it would probably be that foreign indices probably outperform SPY. I mean, if you look at SPY, I can try to share this. Hopefully my CPU doesn't crash.
Yeah.
But,
if you need to, you can also hit stop cam during this part.
Okay. I will definitely do that. Yeah. If you look like the, someone on one of my YouTube videos mentioned this. He goes, I live in England, and I'm invested in the S&P 500. And like, even though the S&P 500 has rallied tremendously, for me, because my life is denominated in British pounds, it's not, it's nowhere near what it is in US dollars, right? So what this reflects is like there are $16 trillion in US equities. And if you look, like, in dollar terms, right, we rallied way high, much higher than the Liberation Day, right? But and this is denominated in dollars. If you look, if you denominate the S&P 500 in, say, pounds, God, computer's super slow. If you denominate in pounds or in euro or in yen, you can see how much weaker it is, right? So this is the S&P 500 denominated in pounds, and there are trillions of dollars that foreigners have. We have acted as the world's piggy bank for the rest of the world for decades. This is denominated in euros. It's a much different looking chart. And so, I think that there is this kind of headwind that'll be there where, the administration needs a weaker dollar. My framework from the beginning was tariffs alone are not going to be enough to truly do what they want to do. You need a significantly weaker dollar. And so, if you are living in a weaker dollar sort of world, and you're a foreigner that has unhedged, S&P 500 or NASDAQ exposure, I think the mentality is a lot different than, say, you're an American investor and you're in the S&P 500. I mean, from the peak, this is denominated in euros. From the peak, the S&P 500 in euros is still down 11% from the peak.
Mm.
You're a foreigner. Everything that worked for decades, which was dollar always, got stronger, and our markets always got stronger. All those things that worked, I think we're starting to see are not working as well. And yeah, I haven't looked at it in the yen recently. Yeah, very similar. So yeah.
Damn. That's some wild stuff. What was going to? There was a question that popped in my head a few minutes ago. It was. Do you have any thoughts on silver?
Silver. I haven't looked at silver in a while. The problem with silver is, like, I don't know. I was bullish on silver in 2022, and I think that, like, the lowest ounces I ever got were like $12. I want to say 12 or 13 was when I was able to scoop some. I was like, basically doubled since then. Yeah, I don't know. This is a pretty good looking chart on a longer term time frame. But yeah, silver's hard because, like, there's also the industrial side to it. So like a bet on gold or Bitcoin is basically a bet against the purchasing power of the dollar. That is different from silver, where that is part of it, right? Part of why you would long silver is a bet against the purchasing power of the dollar. But part of it is, like, kind of aggregate economic activity, industrial output, right? These cyclical sort of components to it, because it's used in so many industrial, has so many industrial uses. So silver is, like, a little harder. I mean, the chart looks really good though. It's kind of rising wedgy, but but on a long,
you heard it here first, everybody. FUD from Mr. Robert Infra on silver.
Yeah, on a long-term time frame, I mean, if it can break 35, that would be pretty bullish to me. Man, that's a long, like, cup and handle sort of vibe I'm getting from this chart. Yeah, like, the people that call for silver to go to 500, it's basically a way to get better returns than gold. Could be possible. It's not a view that I hold super strongly. I am 100% confident in gold over the next decade or two. But, like, on silver, it's like, yeah, it's probably not going to do badly, but I just don't have as high conviction in it. But yeah, I mean, the chart does look pretty good. If it can break out here above like 35.50, then it's pretty bullish.
Yeah, very nice. Very nice. Hey, what kind of things were you into before you jumped into like trading and learning about all these markets and stuff like that? Were you like good in school? Were you like interested in
Yeah.
these things growing up as well?
Yeah, I was always kind of like that Asperger's nerd, from like my earliest memories. Uh, like, yeah, I would say, like puzzles and I was very quiet. Like my parents told me I didn't speak for like the first 4 years I was alive. And
Really?
then one day I just started like speaking in full articulate sentences. And yeah, like I was always kind of weird kid, very like brainy, nerdy type. And so yeah, I did like really well in school. I actually took photography courses. So yeah, that was kind of that was what I thought I wanted to do. And it was kind of another
Mm,
thing where there's like the very kind of scientific, right, physics. Like it was commercial photography course, and so we learned the physics of light and the way that film actually worked, right, and some of those kind of more hard black or white sort of things, no pun intended. But then there's the creative side, and so it's kind of like markets where they're the two sides to it that just kind of how I am. I appreciate something where it can allow the kind of like quantitative black or white uh, sort of part of my brain to mesh with the more creative
mm.
side. Anything like that, I enjoy. So I yeah, play a little guitar. I'm not like crazy into music, but I'm
What do
all
you like to
right.
play? What kind of stuff?
I don't know, like everything. Just mess around. Like I learned scales like a couple years ago, and I just kind of when I'm bored or stressed, just kind of yeah.
Sure.
I my musical like I enjoy basically every kind of music.
Mm,
I try to be open minded. One of the things that I think is like in terms of like trading and markets and macro, I think being open minded is like super important. And so yeah, like whether it's with music, like I certainly have very strong opinions on a lot of things, uh, but uh, you know, I, I I try to not let myself get stuck into like get stuck into a tight range that I can't get myself out, right? Because some people, they see the world through like such a narrow lens, and that lens is coated in dirt and scratched up, and and it's like I try to keep as open of a mind as possible. I think with markets and macro especially, that's really important. Keep an open mind, and so I try to do that with music. Listen to a wide variety. I mean, in my Spotify thing from the past week, I have like Russian ska to like classical to like blues, like Delta blues, rock. Like I try to do it all. Aesop Rock was in there, or Atmosphere or something. It's a little bit of like hip hop and rap. Like I
alright.
try to keep my mind like kind of open. And so I enjoy things that kind of like allow that or encourage that. I
Mm,
listen to probably, I don't know, like 20, 30 something hours of macro podcasts a week. And there are people that I have very strong personal opinions about, right? In terms of their ability to accurately predict market trends, economic trends, that have a very, very poor track record. But
mm,
I force myself to watch it with an open mind, listen to their argument, right? Because there could very well come a point where even though they were wrong for the past 3.5, 4 years, their things could change, and there could be a moment where now they're worth listening to. So
mm.
I try to do that. I try to like kind of force myself to stay open-minded, if that makes sense,
Yeah.
rather than like getting in this like super narrow kind of limited, and especially like I would recommend to people like politics
Mm,
nowadays, like partisanship and all that. Like you just gotta like not let any of that BS in. Like, yeah, politics are part of macro, right?
mm.
Like but like the degree to which some people, like some of the comments on my YouTube videos, it's like from the get-go, it's like the only about is Trump and
Mm,
this and that, and like what, MSNBC told them. Or on the other side, right? Like some guy just, super hardcore. You can't criticize Trump in any circumstance because everything he's doing is great because Fox
mm,
News told me, right? Like, but I get quite a lot of that on my YouTube, which yeah, I just like I would recommend, anyone like that is not going to help you. Like in
mm,
markets and macro and trading, uh yeah, try to break out of that because it's toxic, it's unproductive, and you will miss the real picture, right? You will
mm.
miss the real story of what's kind of actually going on.
Hey, how's that journey been, by the way? You started a YouTube channel a little while ago. It's growing nicely. You get to talk about, I guess you could, I mean, I assume it's just, is it right now more of a creative venture, just to get your thoughts out on any topic that you find interesting? You can just make a quick video on it.
Yeah, it's kind of blowing my mind. I like I spent so much time kind of nerding out on macro and finance and monetary policy and all this stuff. And, I was able to kind of devote the time and energy to do that because it was interesting to me and I'm kind of obsessive on and just kind of have that element with my brain. But I was like, but you shouldn't have to. You shouldn't have to do that. You shouldn't have to do what I just did to understand the modern day financial system, to understand the dollar, right? This
Mm,
is the thing that rules your life. And most people have no understanding of like, Twitter, with Twitter, that was one of my goals was to kind of like, help educate and break down some very complicated, very complex sort of dynamics into more digestible kind of sort of digestible pieces. That was the kind of main goal of Twitter. And other things, there's the Bitcoin side and stuff and all the spaces we do and all that. But like really what I really wanted to do with the Twitter was education for normal everyday people, right? So they don't have to spend 35,000 hours in 5 years, right, to
mm,
understand the system. And so for YouTube, that was kind of like that was my main goal.
mm.
Was like just kind of a continuation of that goal that I had had with Twitter. Um, yeah, and then like so I got monetized in like 15 days.
Wow.
Um,
Way
I
to go. That's crazy.
yeah, like I thought I did research on like Grok, right?
Yeah.
And chat in GPT. I was like, okay, like analyze this data and this data and this data. Like give me like the mean and the median for monetization. And it was like
Mm.
around 18 months, right? And so I was like, damn, okay. Like 18 months to start to eat just to get monetized.
Yeah.
And then right, I was like, all right, it's kind of a long time, but I'm down for that. Like I'll try, right? Like okay, let's do this. And yeah, and then like a couple, like 5, 6 videos later, I'm like already at 1,000 subs, already monetized, and then fast forward another month. So I think I'm about 2 months in, like 2 months and a couple days. And yeah, we're at like 9,500. Um, so it's like
Wow.
far beyond any. I was ready to devote 18 months to get 1,000, I was like, I knew I could get 1,000, right? I knew I
Mm,
could get monetized and I knew there was a demand for kind of the type of stuff I try to do because there's really not many people doing that. There's
mhm.
a lot of the macro nerds who talk to each other, right?
Yeah.
But there's very little of those people with that knowledge breaking it down
Mhm.
for kind of average people. And so I was like, I knew there was a demand. I knew it would eventually do well, but like I had no idea that it would be at basically 10K in two
Mm.
months. Like it's kind of blowing my mind. I don't really know what I'm
Yeah, it's
doing.
wild.
You know what I mean? It's very scary because I'm just kind of like, all right, do a video on this. Like just kind of going with the flow and trying to just put one foot in front of the other and keep kind
Yeah.
of doing videos, and yeah, some of them are like, it's funny because like I did one on Triffin's Dilemma. And I spent like 4 or 5 hours preparing all the slides and the research, like the papers I was referencing. And it was like one of the worst performing videos out of the past
Every time.
couple. Yeah, but like the ones that I just kind of like think of it and I just kind of
Yeah.
throw it up there, those will, just wildly outperform. So kind of what I'm learning is you just gotta make stuff.
Mm.
And so today, yeah, I'm gonna do one on commodities, and kind of that. I think the big thing with the YouTube and Twitter that it contributed to kind of the growth that I've had over the past year is this all the work that I've done on the silent depression concept. Um, that seems to be like resonating to such a degree with people out there, not in FinTwit, right? Not in crypto Twitter, just random people. This feeling like the economy has not been what they say it's been, right?
Mm.
For a long time, for over a decade or two. And like from all the kind of independent research I've done, there's you know a ton of evidence for that, right? That like something changed 20, 30 years ago, and the world today is not the economy is nowhere near as strong, and
Mm.
people are struggling. And then they're gaslighted, right, by the mainstream media, and kind of outlets. They're gaslighted that everything's so great and they need to stop complaining.
Mm.
And so I think that there's like that's really what has which again, kind of going back to what we were talking about earlier, it stems from my personal experience, right? Which was I had worked 15 years in a particular healthcare field, and I'd worked my way to the top. I became a director, right? I was literally right under the boss, the
Mm.
owner. I had gotten that director level position, right? I had the 6-figure salary. And granted, I'm in LA, so everyone knows how crazy LA is, but it was still like after something, 2021, 2022 is like something was just like not right. And
Mm.
I felt it like deep in my bones. And so, it comes from my personal experience, which I think helps. I think when, yeah, if I had to try to guess, right, like why, I would say number one, that kind of concept that I've been doing a lot of work on, that concept seems to really resonate with people, especially younger people. And number two, it's coming from a kind of personal, lived experience, as people say.
Mm. Wow. Dang. Very cool. Very cool stuff. I was also going to ask on the spaces side of things. Well, okay, actually, two things. So yeah, I definitely feel that, and kind of hear what you're saying there. Especially even on other platforms like Instagram, in like it's kind of, I don't know if you've noticed this. I don't know if you're on other platforms, but like the comment section is like a whole thing. Like you'll find a good video, and you find yourself scrolling through the comment sections where people kind of leave their raw thoughts, and you kind
Yeah.
of get a bit of a pulse check on where everyone's
How people are
feeling.
really doing. Yeah.
Yeah. I'm not sure if you've noticed that, but I have
Yeah.
noticed a bit of that kind of what you call it, a silent depression.
Yeah. So interestingly, like, so people hear depression and they picture the Great Depression.
Right.
And like, really though, what a depression is a sustained period of like sub-trend growth, right? Sub-potential growth. So it's not necessarily, the super sharp, super severe sort of recession or economic contraction. You look at Japan, right? And you look at their GDP, and I think at the worst in the past 30 years, they had like a quarter of -3%. That's not Great Depression, but
Mm.
yet I would argue that their lost decades, as they call it, of the past, basically 30 years, I would argue that is the definition of a depression. Just stagnant, right? It
Mm.
could be better. The economy could be stronger. Employment could be better. They have the potential. as a society, as an economy, as a political structure, they have the potential, but there's something kind of holding it back. And so, yeah, so depression, like people kind of interpret that part of it. But really it's just this kind of like prolonged period of, and I'm not the only one to kind of have this framework. Jeff Snyder, I appreciate people, like I said. I don't agree with people on 100% of what they say, but Jeff Snyder is clearly a very bright guy, and I've been following his work for a number of years. And you know, he has also kind of picked up on some of these trends. And so, yeah, I think you know, people, when you're gaslit day in and day out, and you're working hard and getting and falling further and further behind, you know, the melting ice cube of the dollar. Yeah. And then you're told everything's great. You know, some guy like me comes around and is like, oh no, like actually, you're not crazy. You're not crazy to feel depressed and hopeless and, you know, despair and despondency. There are real, you know, and I haven't just said it, right? Like I haven't just claimed. I've put tons of like independent research and analysis, right, of the government data. I think the key is you have to kind of, going back to the earlier part, you have to kind of know like how to look at things, right? Like a lot of, you know, Bloomberg or CNBC, when the average hourly wage, when personal income is reported, they will report on the nominal number of the whatever personal income grew. But like, you want to look at things like, how did personal income grow relative to the growth of GDP, right? Things like that, where all you got to do is just divide personal income by GDP or by the M2 money supply. If you're trying to get a real inflation adjusted personal income number, you got to divide it by the money supply, right? So it's not like the most complicated sort of stuff, but I think it's that like extra layer that once you start looking at things like a layer deeper than the kind of headline, a lot of really interesting things start to kind of become clear.
I was going to say, it's like quite the rabbit hole. But how have your how's your experience been with like the spaces, meeting various people, sitting on panels, and speaking on them with various people in the industry? Sometimes we get some more traditional folks. Sometimes we get some more Bitcoin maxis, and just, I mean, you go to a lot of the various spaces. You're in some of the Wolf spaces, Bitcoin First to some. You've hosted some yourself. But what are some of the things you've learned from those conversations?
Yeah. All of this, whether it's spaces or what we're doing now, it's all very like nerve-wracking for me. I've always been that like super shy, introspective sort of type. So at first it was like terrifying, and I'd be like sweat. I think the first one I ever did was Fred. Fred had like a weekend space or something. I think that was the first one I ever did. And I just remember like sweating and being so like uncomfortable and like so nervous and anxious. But you know, over time kind of got used to it. And I was able to kind of like relax a little bit. And yeah, it was cool because like, you know, look, they're open to the world, you know, like anyone on Twitter with an internet connection can join. And yeah, I got to know you. I got to know Lauren, Dark Side, right? Thomas, Puncher. I'll forget a bunch of people, of course, you know, but yeah, you know, that like core group that and they're all really good people. I've talked with all of them offline, most of them offline, and yeah, like it's cool because, like I said, I'm kind of shy, and so you know, to be able to like have a way to connect with other people, it's pretty cool. And you know, I think there's sometimes where it's not the most productive, right? Spaces can always devolve. But then there's some really cool stuff. Like I got to talk, you know, I mean, I do a more traditional finance space in the morning, and, you know, like there were some pretty, you know, Michael Cantro and George Noble and these guys in the TradFi world that are, you know, super big. And like, I'm getting to talk to Julian Bridgen. Like what, you know, it's cool. It's cool. And so, yeah, I've kind of built that kind of thing, not just in the Bitcoin world, but also like,
Cool.
some of those TradFi guys are kind of starting to like, pay attention. Like Nouriel Rubini follows me. Like it's like, what? Me? Why? I'm just a nerd. Like, Nouriel Rubini or right. Like, so yeah, I don't know. It's kind of this weird like mesh of the two worlds where yeah, it's kind of cool, because like where else can you talk to some, people like that,
Yeah.
and on the Bitcoin side too, like, Lynn Alden was in a one of the Bitcoin Today spaces a couple weeks ago.
Oh, nice.
That's so like that's rad, that
Yeah.
I got to like ask a super nerdy question about a balance of payments with right and the dollar and the Federal Reserve balance sheet to
Yeah.
Lynn Alden, right? They wrote the book on wrote Broken Money. So yeah, like it's really cool. I think, there are positives and negatives to it,
Sure.
to the internet, to social media. But yeah, I try to like stay, especially now that I'm kind of growing in terms of like size or whatever it's called, reach or whatever, reputation. I'm trying to like, be very mindful of being positive, being respectful, being calm, being objective and rational. And that like so far it's worked pretty well. I don't really have too many haters. Uh, there's like one guy that just is obsessed with me for some reason. But taking that approach of like trying to never raise my voice, never swear, never call people names, right? Like just behave the way you would in real life.
Mm,
And that goes on YouTube comments or Twitter spaces, right? Or wherever. And if you do that, I think that's worth a lot too. I
mm,
think like nowadays everything is so toxic that I mean I've had a number of people, like dozens of people, make comments about like I just appreciate that you're like not the type to like go all crazy and start screaming and calling people names and the kind of partisan nonsense, right? Like a lot of people have said that. Like it's so refreshing to have someone who just tries. I'm not 100% objective. I never will be, but I try to kind of avoid partisan bias and all that kind of stuff. And people appreciate it. So I would give that like tip, if
mm.
people are like, have a small account, they're thinking about, okay, I'm going to do Twitter spaces and do this and do that. Like I would definitely recommend that you try to stay as calm, rational, objective, nonpartisan. I think that goes a long way nowadays, given where everything is.
Yeah, it certainly depends on what you're looking for as well. Like I know some of the guys, they want to get that cult following, in which case
Yeah,
it's like total opposites. You want to scream
that's
as
true.
much as you can, and it's interesting. It's like two totally different ways to grow and two totally different ways to kind of use your platform. I'm kind of with you on that front. I'm not really the guy to be screaming from the hilltops about things nearly as much. So it's not really my style, I guess.
Yeah.
Versus
I
some
would much
people,
rather scream from the rooftops about the dollar,
yeah,
about Triffin's dilemma,
there you
right? About how the reserve currency is a curse.
go.
I'd much rather yell about things that, in my opinion, matter a lot more.
Yeah.
I would much rather yell about the fact that, the average hourly wage divided by gold has fallen by like 70% over the past 25
Mm,
years. That's the kind of stuff that I think is really important, So
yeah.
I'm not afraid to like be, affirmative or pushy or, whatever the word is.
Mhm.
But I just think like there's more important things, to do that with. So
Very nice. Well, I know we gotta wrap here in a second, but what is one thing that you're uh, looking forward to slash think there will be more rhetoric around this for the rest of 2025, maybe 2026? Is there any trends you're looking at that you think will be playing out or things you're paying attention to?
yeah, so someone asked me, I do a little kind of monthly interview with Aaron from Carnivore Trades. And we had done one in February, and I basically nailed the kind of capital repatriation call. So he was like, okay, because you nailed that in February, like what's the next call, right? And I was like, man, I'm not super confident on really anything. That was
Mm,
before the all those people had pivoted towards Run It Hot. That was before that, but I was like, if I had to guess, it's going to be that the yield curve continues to steepen, and eventually bond yields continue to rise, especially at the long end. And if this tax bill does not get like meaningfully improved in terms of the effect on the deficit, that the bond market very well, especially the long end of the yield curve, could get. I mean, like, you look at the 10-year yield for the gilt during the Liz Truss moment, and it rose like 120, 130 basis points in like 5 days.
Mm.
That, on our tenure, that would take our tenure to about 520 ish, and ironically, that's the same level that Jeffrey Goonlock called for on CNBC a couple weeks ago. That's the same level Jim Bianco has been talking about. Like, so yeah, if I had to make one call, it's probably, the other thing I would say is, if the administration is serious, if someone believes that they're serious, the other thing is, like, I believe watching the dollar will be super, super important.
Mm.
I think that's like one of the best scorecards for kind of how much of this stuff is actually real structural change, and how much of it is just kind of talk and rhetoric and that kind of
Mm-hmm.
thing. I think the dollar will be super important, and then I would say, unless they meaningfully cut, the yield curve is going to continue to steepen, and long end rates are going to continue higher. They will probably shift issuance. I mean, they're already kind of talking about not issuing as much they already don't issue very much out there, and they're talking about reducing it even more. So yeah, I think like the bond market could start to get a little spicy as at the longer end. If I had to make one prediction for the next like 12 months, that's probably what it would be.
Very nice. Very nice. Well, dude, I appreciate you coming on. This is fun. Just kind of pick your brain and go deep into a few different topics on all the things. I appreciate you coming on.
Yeah, of course.
Is there anything you wanted to leave the audience with? Anything you've got coming up, or things you want to shout out before we wrap?
Don't think so. I would say, yeah, if you one of those few that haven't heard about my YouTube, I would say just go check that out. Trying to make it better. Like, it's a work in progress. Please don't, jump down my throat. But I think it's going pretty well. So I would say check that out. And yeah, just keep on keeping on.
Keep on keeping on. Yeah, and if you're on X, you can do all that just right above our faces. You can click his handle, and then it should be in his bio. And if you're on YouTube, right below us in the description, you can find all that information there. And yeah, if you are still watching, you haven't already, please repost the stream and give us a follow here at Wolf, because we're putting on streams and spaces every single day. Catch you guys all in the next one. Take care. And 3,